Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here.
All right, so we're talking discount retailers. I keep on hearing this theme here for retailers, Landon, and that foot traffic is picking up. I think that's right in the wheelhouse of Dollar Tree. Stock's only up about 5% this year. What kind of data do you have ahead of earnings for this one?
Yeah, I mean, it is only up a few percent this year, but if you go back to October, it's up nearly 50%. It's a little above 100 to a little bit below 150. So it's pushing up the high 40s on percentage gain since October. It's on a nice run and kind of hitting a little bit of resistance, if you will. If you go back in time, usually 150 to 160 is where the stock has had some trouble. But you're right, foot traffic is key for this name. They have a pretty weak web presence. It's not strong, and we've not seen them really take a lot of strides in that regard. In fact, if you look at the amount of change in their visits, they're down about 2%, and that's off of pretty low levels. Dollar General and Five Below are doing much better, getting people to their website, getting e-commerce going. So Dollar Tree and Family Dollar, it's really just not their play. That's a bit of a disappointment. They need to improve on that. But inflation is still elevated. I think we're at 3.2% now, and that's down significantly from the last couple of years, but it's still higher than it was any time before that, going back maybe 10 or 15 years. So we still have elevated inflation levels, but you would think that would drive a lot of traffic to Dollar Tree and Family Dollar, but there's also some pressures that are hitting their customers. So, of course, inflation is one of them, but they're also, there's been reduced government benefits. SNAP benefits are down about 23% on a year-over-year basis. Their consumers are experiencing depleted savings, and that's just going to have a negative impact on the low-income consumers, which is, the bread and butter of Dollar Tree and Family Dollar. So, I think that even though that's, this is kind of their wheelhouse, it's almost going a little too far, and people are getting squeezed just a little bit. They still have, great deals, and it's a great place to stretch your dollar for sure. But when you get into discretionary, then you start, it's a little bit different because you start talking about people either going in for essentials or discretionary. And if it's essentials, sure, it makes sense. Then they're competing with BG, sorry. Then they're DG, Dollar General. Then they're competing with them. But if you get into discretionary, then you're kind of competing with Five Below, and Five Below has really done a good job of expanding their consumer base. They've got slightly higher earning customers, and they're experiencing rapid expansion. So a little bit more bullish on Five Below than we are on Dollar Tree. Even though, they got the upgrade by J.P. Morgan, they've also got some bad press with the Family Dollar having a rodent-infested warehouse with $41 million fine. That's bad for publicity for sure. But overall, I'd say that we're slightly bearish on this one. Not pounding the puts or anything like that, but just a little bit concerned that their consumer is weaker than they were in the past, and that maybe there's better places for some of the discretionary side of spending when people decide to go there or Five Below.
Landon, when we look at this space of discount retailers, and if you're a shareholder and you're kind of surveying these types of companies and you're looking for growth for a company like Dollar Tree here, there's a number of ways you can do that. You could buy back stock. You can look to cut costs and improve margins. You can look to open more stores, or I think you kind of hit on as well, really enhance that digital experience. That could also bring in some traffic as well. And I saw Family Dollar did sign up with Ibotta's a network there for their promotional platform, trying to drive or provide more promotions for their customers to get it through that digital avenue. What do you think Dollar Tree or a shareholder would want to look for in this earnings report to see that the company is moving towards a bigger growth trajectory here?
For me, I would not want to see a focus on margins. I want to see a focus on growth and revenue. I want to see more stores. I want to see a stronger e-commerce presence. I think they got to get that top line bigger. Of course, cutting expenses and getting more efficient is always good, but you're not going to have explosive growth off of that. We've seen, I keep talking about Five Below, but we've seen their strategy is just build more stores and, get people in the store more. The prices are a little bit higher, but I would favor that kind of strategy. Get some more stores, get more people on the website, get more foot traffic, increase the top line, and not worry so much about the margins. I mean, obviously, again, it's best to do both, but if I had to pick one or the other, I'd shoot for that top line revenue.
And, Landon, when you look at their mentions count up 22% year over year, stock price hasn't caught up to that yet. I mean, do you expect a surprise on this? Like, do you have an earnings score that says, hey, Family Dollar could really weigh on their earnings, even though foot traffic picks up in the namesake portion of their business?
Yeah, I do think the Family Dollar could weigh on them. And yes, mentions are up 22% on a year-over-year basis. And again, you look at the stock price, it's not up that much on a year-over-year basis, but it has run significantly since October. And I think that we're getting in that territory of increased expectations where maybe some of this is priced in. So we're actually, based on everything that I've said, the weakened consumer and the discretionary weakness against Five Below and the e-commerce weakness, we're a little bit bearish on this one. We're at a -9. It's not huge. It's just kind of more of an avoid right now. Maybe sell some calls, that kind of play, but nothing too dramatic on the downside. But we're just not seeing that the increase in price on the stock is really justified given what's happened with all the data. Yes, the data's up a little bit, but nowhere near enough to justify the run that the stock has taken over the last 4 or 5 months.
Landon, real quick before I let you go, inflationary pressures. We've been talking about it for years now. Is that, I always look at it, and these stocks haven't performed really well. They were choppy last year, Dollar General and Dollar Tree. These inflationary pressures that we keep on talking about doesn't seem to be helping these discount retailers where you think it should be, right?
Right, absolutely. I mean, if you asked me 3 or 4 years ago and you tell me what inflation is going to be, I'd probably buy a lot of Dollar General, Dollar Tree, Five Below. I'm thinking that that's going to obviously help them. But there's two sides to that equation. Yes, people need to go to these stores, but they're also they're stretched a lot thinner, and even essentials are discretionary to a point. I mean, you can get by with less of some things and buying less of this and that. I think the fact that it's weakening the consumer so much, and that's their core audience, is that lower income consumer. I think that's actually weighing on them more than what I would have expected a few years ago, given these inflation levels. So it's a two-edged sword, and yes, it drives the demand, but it also really hurts the supply of dollars coming from those consumers. So it's tough. It's not as simple as I once thought it would be.
Yep. All right. Great stuff. Great data as always, Landon. We got an option strategy that's going to take care of maybe a move to the downside, maybe a move to the upside. Who knows? But we've got one coming up. Thanks to Landon. Appreciate it.
Thank you.
You got it. Landon Swan, co-founder at LikeFolio, breaking down the data for us on this discount retailer. Nate, let's get into the exam.